Well, greetings everybody. So today we are continuing our countdown. These are the final 3 free recommendations prior to our course getting started. So we ran the 11 baskets of the components of the sector ETFs. We ran it with a correlation of 0.6, which is a little looser than normal, and an RW coefficient of 0.8. I then went ahead and set the number of winners for the back test, a minimum of 5, and then the current situation of the expectation value being 5% up or down. So running that scenario, we came up with quite a number, but of course I was looking for things of the correlation between 0.6 and 0.8, which was the reason for setting the correlation a little lower than normal. And here we found one that was very strong. The correlation was in that 0.6 to 0.8 range, and the RW coefficient is very strong. Let's go take a look at it over in the analysis page. Okay. So notice, again, with the correlation a little less, you see a little bit jumpier of a motion. But with the RW coefficient being as strong as it is, these two products are clearly affected by the same things in the marketplace, right? This is IFF versus PPG. They're both huge companies. They both are wholesale, right? They sell products to a lot of other people. But this is fragrances, and this is color, right? Paints and things. So I guess, I mean, just sitting back trying to figure out why they would have the same exposure in the market, I imagine it's the same creative type world, and perhaps there's an overlap in the cosmetic section for their clients. But in any case, the RW coefficient shows that they are affected very similarly by effects in the marketplace. So given that, and given the fact that it has a perfect track record, we're going to add this to our observe page. Let's do that now. Okay, so as we mentioned a moment ago, a little bit more erratic of a picture, and I think that's indicative of the lower correlation, but the RW coefficient is very strong, right? So it's way down here outside the second standard deviation down below. It had a move down today. Let's keep an eye on it. Obviously, if that move down continues, we're going to wait to get into it. But if it starts a move back up, I'm going to jump into this right away. Let's go look at it in the hitting probabilities. Okay, a nice mean reversion, not crazy like we've seen in some of them. Let's run the Monte Carlo simulation with 10,000 paths. Okay, so very interesting, right? It's saying obviously this is a long, and the current price being minus 23.78. It really likes it as far as us not losing money on it. It thinks that in 30 days we have almost a 100% chance of being above that. Obviously, you have to discount some of that because the model is only looking at the data over the past 3 years, and obviously the data over the past 3 years is very strong for this. So we'll keep an eye on it. If it starts to turn against us, of course, we still would like to get out right away. The expectation value is almost 15%. As you guys know, I tend to round those off to 10 because I use this for my entry and exit points. And then it's saying half the time to get all the way back to the mean is 40 bars, and the mode being 29. I doubt once I round this off to 10 that we're going to be targeting all the way back to the mean, so it'll be something less than that. But in any case, these numbers are very strong. This is an interesting pair to trade. Let's go look one more time in the analysis. So a good picture, a perfect track record, a really strong RW coefficient. The only number that we are playing with a little bit today is the correlation, which is lower than our normal number. But all in all, it looks very strong. We're going to make this the recommendation. IFF minus 1.26 of PPG. It is a long, so for every share of IFF that you buy, you're going to sell 1.26 shares of PPG. Good luck with your trading.